The housing market is heading for a massive shakeup, and most people have no idea what's coming. Home prices are on edge. Interest rates are fluctuating. Construction costs are about to skyrocket. And it's all happening at the exact same time as mass deportations, government layoffs, and new tariffs on housing materials. Will this lead to a market crash, or an unexpected boom? In today's video, we'll break down the 5 major economic shifts that will completely transform the housing market. Stay until the end, because all of these changes are connected, and they could determine whether home prices go up or down in the coming months. Before we dive in, hit that like button to help this video reach more people and subscribe for real-time market updates. What do mass deportations have to do with home prices? More than you think. According to the National Immigration Forum, 10% to 19% of the U.S. construction workforce is made up of undocumented immigrants. If those workers are deported, who's left to build homes? Fewer workers mean fewer new homes. And fewer new homes mean higher home prices. This could make construction costs soar, pushing new home prices up while also delaying major housing projects. But there's also a flip side. If large numbers of people are deported, demand for housing could drop. Fewer renters equals less demand for apartments. Fewer homebuyers equals more unsold houses on the market. This is a major tug-of-war between supply and demand. Which force will win? We'll have to watch the market closely, but it could create some big opportunities for buyers and investors. Thousands of government workers could lose their jobs soon, and that could lead to more home sales and foreclosures. The Trump administration is looking to cut government spending, eliminate waste, and potentially lay off thousands of federal workers. What does this mean for housing? Lower demand for homes. People without jobs aren't likely to buy houses. More forced home sales. Laid-off workers might need to sell quickly to stay afloat. A potential rise in foreclosures. Some homeowners might struggle to make mortgage payments. If we see a flood of new listings, this could cool down home prices in certain markets, but again, it all depends on how severe the layoffs are. Keep an eye on this over the next 12-18 months, because it could mean a rare window of opportunity for homebuyers. Canada is one of the largest suppliers of lumber to the US, and now, Trump is proposing a 25% tariff on Canadian imports, including lumber. What does that mean for home prices? Higher lumber prices equals more expensive new homes. Higher renovation costs equals more expensive home improvements. Developers may slow down new construction if these tariffs go into effect. Expect a rise in home prices due to increased building costs. But here's the wild card. Just a few days after announcing the tariffs, Trump paused them until March. Will they go into effect? No one knows yet. If they do, expect home builders to pass these costs on to buyers, driving up new home prices even more. Right now, mortgage rates are sitting around 7%. But Trump has promised to bring rates down to 3%. Is that even possible? The short answer: not without major intervention. The Federal Reserve, not the president, controls interest rates. The Fed is not planning major rate cuts in 2025. They're worried about inflation. Banks won't lower mortgage rates unless the Fed does first. So unless a major government subsidy program is introduced, a 3% mortgage rate is unlikely anytime soon. But if mortgage rates do fall, more buyers will enter the market equals higher home prices. More homeowners may list their homes for sale equals more inventory. Refinancing will skyrocket. If you're planning to buy a home soon, keep a close eye on mortgage rate trends in 2025. Fannie Mae and Freddie Mac help keep mortgage rates low by buying loans from banks. But now, the government may privatize them, meaning they won't have government backing anymore. Why does this matter? If they become private, they'll take on more risk. Higher risk means higher mortgage rates, because banks will demand higher returns. This could make homeownership even more expensive. According to CNBC, privatization could lead to even higher mortgage rates in the future. If this happens, it could push more buyers out of the market, reducing home demand and slowing price growth. Once again, this is a huge unknown, but if it goes through, expect big changes in mortgage lending and home affordability. The housing market is in a state of uncertainty like we haven't seen in years. If supply shrinks, due to labor shortages and tariffs, home prices could rise. If demand drops, due to layoffs and rising mortgage rates, prices could fall. So what should you do? If you're looking to buy a home, pay attention to mortgage rate trends. If they drop, be ready to move fast. Watch for government layoffs, they could create buying opportunities. If you're a homeowner, if mortgage rates drop, consider refinancing to lock in a lower rate. If construction costs rise, hold off on major renovations if possible. If you're an investor, rental demand could shift if deportations and layoffs impact certain markets. Higher mortgage rates could keep people renting longer, creating potential opportunities in multifamily housing. Will housing prices go up or down in 2025? Are mortgage rates actually going to drop? Is this the worst time to buy a home, or the best? Drop a comment below. I want to hear your thoughts. And don't forget to like, share and subscribe for more expert market breakdowns.